Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Jay Conner, and he is known as the Private Money Authority. Since 2003, he has flipped and rehabbed more than 500 homes in Eastern North Carolina, completed over 118 million, that's with an M, million, in real estate transactions, and helped more than 2,000 investors learn how to fund deals using private money. After losing his bank line of credit in 2009, Jay raised over $2.1 million in private money in just 90 days and built a repeatable system that allows him to run a seven-figure real estate business while working less than 10 hours a week. Jay, tell us how to do it. 10 hours a week, and you're doing that. That's awesome.
Thank you, Gary. Thank you so much for inviting me to come along and talk about my most favorite topic that I'm so passionate about, and that's private money. And the reason for that is because in mine and Carol Joy's real estate investing business, we've never missed out on a deal since 2009 for not having the funding. It's mastering this piece of the business, where to get the funding without relying on banks, mortgage companies, any kind of institutional money. It's been the biggest game changer, biggest impact on our real estate investing business, because stop and think about it. How much more confident, how many more offers is a real estate investor going to make when they know exactly where the money is coming from?
Right. So, I mean, that back in 2009, that had to be pretty harsh, where you had a line of credit and all of a sudden, boom, it's gone. And then it kind of leaves you scrambling. Obviously, we've talked on this show many times about, how pain makes people act. So obviously that was some pretty big pain to have that happen. What was it that made you, when that happened, what was it that made you decide to go to private money?
Well, that's a great question, because let me share my experience. We started investing in single family houses in 2003 here in Eastern North Carolina. And prior to that, I was in the mobile home business. My dad, Wallace Conner, he had the largest retailing company of mobile homes in the nation. Yeah, all the way back in the 1980s. But anyway, I knew if I ever got out of mobile homes, I wanted to get into single family houses. I wanted to flip houses. And that's before HGTV was even thought about.
Right.
And so Gary, the only thing that I knew to do to get my deals funded was go to the local bank, establish a line of credit.
Mm-hmm.
And back then in 2003, when we started, if you had a decent credit score, you could get an unsecured, let me repeat that, unsecured line of credit at the local bank. So I got a little small $250,000 unsecured line of credit to go flip a house. And then that line of credit grew over time. And so I just used the local bank from 2003 until January of 2009. So how did I get into private money? Well, it was out of necessity.
Right.
I called up my banker in January of 2009. I had 2 houses under contract to purchase. I thought I still had a line of credit at the local bank. I called up my banker. His name was Steve. And I told Steve, I told him about these 2 houses. He said, well, Jay, I'm sorry to tell you, but the bank's closed your line of credit. I said, what in the world are you talking about? You've closed my line of credit. I'd done a lot of deals in those 6 years, always made my payments on time. And Steve said, Jay, don't you know there's a a global financial crisis going on? I said, no, but you just gave me a financial crisis.
Yeah.
I don't have a way to fund these two deals that had a perspective over $100,000 in projected profit. So anyway, I put the phone on the receiver and I sat here for a moment. So here's an important takeaway or lesson. I asked myself a very important, powerful question. And the question I asked myself, and by the way, this question will help anybody fix any problem they got. I don't care if it's health, financial, career, relationships, business. And the question I asked myself is, I said, Jay, who do you know that can help fix your problem? You know, it's not how, it's who. And I immediately thought of a dear friend, Jeff Blankenship. He was living in Greensboro, North Carolina at the time. And we know each other from church and a cappella gospel singing events and that kind of thing. He was investing in single family houses in Greensboro. I called him up. I told him what had just happened. And Jeff says, welcome to the club, Jay. And I said, I'm not sure I want to be a member of that club, but
Right.
what club are you talking about? He said, well, my bank cut me off from my line of credit last week. I said, well, Jeff, how are you going to fund your deals? He said, well, have you ever heard of private money? I said, no. He said, have you ever heard of self-directed IRAs and how people can take existing retirement funds, move them to a self-directed IRA account, and then loan that money out to us real estate investors, and the money we pay them is either tax-free or tax-deferred? I said, Jeff, you're talking Greek to me. I said, I don't have a clue what you're talking about. I said, what is private money? He says, well, I'm not absolutely sure, but there's this gentleman down in Jacksonville, Florida, by the name of Ron LeGrand. I said, who's Ron LeGrand? He says, I don't really know, but he says we can get a lot of it really, really fast. I said, let's go to his conference. So Jeff and I, we went to Ron LeGrand's conference to learn about private money, and boy, did I learn about it. So I learned about how this works and how you can raise a lot of it really, really fast. So I came back here to Morehead City, North Carolina, mine and Carol Joy's hometown, and I put my opportunity together. Now, there's a significant distinction on raising this money to fund your deals versus borrowing institutional money. When someone borrows institutional money, there's big differences here. Most people walking around thinking whoever's loaning the money makes the rules, has the underwriting, sets the interest rate, sets the frequency of payments, sets the maximum loan to value, sets the length of the note, all that underwriting stuff. And so here's the first distinction to understand. When you're using private money from individuals, we're not talking hard money here, institutional money, we're talking individuals, human beings. When you're borrowing their private money, you're not applying for a loan. You're offering an opportunity. Mm-hmm. So, you know, as you and I have talked about, I take on the mindset of being an educator.
Right.
So we've had 47 private lenders, individuals fund our deals ever since 2009. And none of them, I'm the private money teacher, right? So none of them had ever heard of private money, private lending, self-directed IRAs. So I just went about spreading the news. And of course, there's various ways to do that. I recorded a 16-minute audio that I shared with people that I have recorded for hundreds of real estate investors across the nation. My very first private lender luncheon, where I invited about 20 people, I fed them lunch. I did a 30-minute PowerPoint explaining what private money is. I raised $969,000 at just that one, 90-minute luncheon. So there's all kinds of ways to get the word out. But the big, most important point that I want to make right now is that there's no chasing, no begging, no selling, no persuading. This is offering an opportunity. Well, what's the opportunity? Well, you have to determine. My suggestion is just duplicate what I do if you're into single family houses I mean, I've been paying my private lenders 8% annual percentage rate ever since February 2009.
Wow.
During the ups, during the downs, whatever the banks and interest rates were doing, I've been paying them a straight 8%, and they love it when they compare that, to what they can get in the local bank. They're tired of the volatility of the stock market. So it's all about just making your opportunity available. And for goodness sakes, don't talk about a deal you need funded in the first conversation, because now you already sound desperate, right?
Right.
Most real estate investors thinks they've got to pitch deals. I've never pitched a deal. All I do is share, teach the opportunity as to how they can be a private lender, earn high rates of return safely and securely. They tell me how much they got. If they want to use retirement funds, I introduce them to the self-directed IRA company that I recommend. And then I call them up with the good news phone call when I've got a deal for them to fund. And I'm not pitching the deal. I'm simply fulfilling what I promised I would do.
Right. So when you're saying, hey, I'm providing them an opportunity, um, with that opportunity, you're saying, hey, I'm giving you 8% for as long as I use your money and so forth. Are they, when you're doing the flipping of the houses and stuff like that, are they just getting the 8%, or are they getting a piece of the house when it's, when you're done and you sell it? How is that working?
That's a great question. So think of the private lender as the bank. So the private lender is the bank. And so just like with a bank, when you borrow money from the bank, they don't own any of the property. They're not sharing in the profits of that deal. Some people in the past have had the business model of private lender puts up the money, and, the operator, negotiates the deal, finds it, oversees it, et cetera. Then they share in the profits. Mm-hmm. So I approach this totally different. So the private lender gets 8%. So it's just like the private lender putting money in a local certificate of deposit at the local bank, but instead of them earning less than 3% annual percentage rate, they're earning 8%.
Now, do you, in that, obviously you set the terms of the 8% that you're going to give them. Is there a certain length of time that, a minimum and a maximum length of time that you're going to borrow their money for?
Yeah, so the promissory note, the length of the note is determined by where they're getting the money from. So if they're just using liquid investment capital, it's a 2-year note. I'm probably not going to use the money for 2 years. And I'm just going to pay them interest for the amount of time that I do use it. So most of the time, that's for 9 months or a year, something like that. If they're getting their money and loaning me money from their retirement funds that they have moved over to a self-directed IRA company, I'll just go ahead and set the term for 5 years, even though I'm probably not going to use it for 5 years. But that just gives the flexibility of the exit strategy. Mm-hmm. Maybe I want to sell it on lease purchase or rent to own, and that gives plenty of time for the buyer of that home to get mortgage ready and then cash all of us out. So the 5 years is no problem on the retirement money, because the interest that's earned on that loan is not going to them directly. It's going to their retirement funds.
Right. With the promissory note, what is obviously you have the history of doing this for a long time. If someone is just starting out, then what's guaranteeing that promissory note?
Oh, that's a great question. That's a great question. So we do not borrow unsecured funds. So the private lender gets the same protection as the local bank does. And so not only do they get the promissory note, but that note is collateralized and backed by the real estate that we are buying. So they get in North Carolina and Texas, it's called a deed of trust. Most states call it a mortgage.
Mm-hmm.
And so the private lender's legal recourse is foreclosure. Now, they don't want the house back, obviously. They just want to collect their interest. But that is their legal recourse if the borrower, if the real estate investor does not pay the private lender, then the property does. And they'll actually end up making more money because we don't borrow more than 75% of the after repaired value. Now, I did not say 75% of the purchase price.
Right.
We always bring home a big check when we buy, particularly if there's going to be a renovation or a rehab, because we always borrow more than we need to purchase the house because we're buying the house at a significant discount, particularly if it needs renovation and is distressed. So when we close on that property, we'll get all the money for the purchase, we get all the money for the renovation up front. But again, we're not going to be borrowing more than 75% of the after repaired value, which gives a really, really nice 25% equity cushion to the private lender.
Right. So, because I'm looking at this two different ways. I'm looking at it from being the person doing the private lending, but then the other side being the one who's offering the opportunity. So from the offering the opportunity side, then, like you said, there's a 25% equity there that you're looking at that, hey, once I'm done and I get everybody paid back and everything else, I should be profiting that 25%.
Well, so the private money is really a balance sheet item.
Right.
More than it is a P&L item, right?
Right.
So, for example, and I'm going to use small numbers so it's easy to follow.
Yep.
Let's say there's a single family house. It's got an after repaired value of $200,000.
Mm-hmm.
Small numbers. Let's say it needs a renovation or rehab of $30,000. Now, I'll buy that house for $100,000. That's 50% of the after repaired value, right?
Mm-hmm.
Now, if I'm going to borrow up to 75% of the after repaired value, so I'll borrow $150,000. So when I go to close on that purchase, $150,000 gets wired into the real estate attorney's trust account. We use real estate attorneys in North Carolina.
Yep.
Most states use title companies. But we'll wire that $150,000 from the private lender into the trust account. We go to closing to purchase that property. Well, $100,000 is going to go to the seller of that property.
Mm-hmm.
There's $50,000 less closing cost called excess cash to close. So I'm going to bring home a $49,000 check because there's closing costs that comes out of it.
Yep.
And I'm going to use $30,000 in this example to renovate the property. Well, I got an extra $20,000 that I can use any way I want to. That extra $20,000, well, some of my private lenders need monthly payments because it's supplemental income. Mm-hmm. Well, whose money am I using to make their initial monthly payments? Their money.
Yeah.
You can't beat that. But back to your question on the profit. So in this example, after repaired value is $200,000. I bought it for $100,000. I put $30,000 in renovation in it.
Mm-hmm.
And let's say just for example purposes, let's say my carrying costs, my interest, taxes, insurance, utility bill, cutting the grass, let's just say that was $10,000.
Mm-hmm. Well,
so the profit in this example would be $60,000.
Right.
The difference between $200 after, I'm going to sell it for $200. Right. And then I bought it for $100. I got 30 in it. I got 10. But now, if I'm going to pay a realtor in the multiple listing service, I pay my realtors 5%. Well, 5% of 200,000 is another 10,000. So if I'm paying a realtor 5%, so back to what you said, my profit is $50,000.
Right, right. Now, in doing this, I mean, again, going back, you've done this many, many, many times. Um, I know you've written a book. I know you have a class that you teach. Can you tell us, tell us about the book and what that helps people with, and then talk to us about the conference.
Sure. Thank you, Gary. So I have three gifts for your audience. One they can get right now immediately. So one of the most common questions I get from real estate investors that haven't raised capital before, they'll say, Jay, how do I start conversations? Like, how do I even bring that up? So I have a script that I have written that I use and have used for many, many years. It's called the Curiosity Opener Script. The curiosity. So it's a script that you bring up private money. And if you want to learn how to start conversations with potential private lenders, you can download this script at jconner, and I'm an ER, not an OR. So you can download it at jayconner.com/scripts. And that's plural, jconner.com/scripts. And then the book that you mentioned, my national best-selling book called Where to Get the Money Now, subtitle, How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional Institutional Lenders. It's on Amazon, but don't give Amazon money for this book. Let me give it to you for free. Just cover shipping and handling. And you can pick up my book at jconner.com/book. The book, it's a very easy read, very easy read. The book goes into detail about exactly what is the opportunity that you're offering to a potential private lender. What's the interest rate? How are they protected? How can they get their money back in case they have an emergency come along? And I'd love to autograph it, ship it to you, express mail, jconner.com/book. And then I do a live event called the Private Money Conference. I do that 3 times a year, February, June, and October. And that's a 3-day deep dive, immersive experience on raising private money. And I also teach A to Z, how to find deals. We do a rehab bus tour on the afternoon of the first day, actually go out and look at our houses that we're doing. And you can check out all the details. It's a $3,000 event, but your audience gets to come for free, Gary. It's only a tiny $97 registration fee to lock in the seats. But your audience can check out all the details of the Private Money Conference at jconner.com/event. jconner.com/event.
Great, Jay. That's very generous of you to offer all that to us for free. Really appreciate that. What have I not asked you you wish I had?
What have you not asked me? Well, I would just share this. We've all heard for many years that knowledge is power. And I'm here to tell you, knowledge is not power. Knowledge is not power. The implementation of knowledge is power. So I would encourage your listeners, Gary, take action on what we've shared here today. And if you have an interest in scaling your business, not missing out on deals, take advantage of the resources that I just offered you.
Great, appreciate it. So Jay, I know you said, gave us your website, but if people like what they hear, they want to reach out to you, they want to learn more about what you do. Obviously, they're able to get the 3 free gifts from you, which I think are going to give them a lot of information there. But tell us again what the website is and where they can find you, and if they got questions, how can they get in touch with you?
Sure. So if you want to call me up, jconner.com. There's my phone number. 252-808-2927. You can put that in the show notes if you want, Gary.
Yep.
But again, those 3 gifts, download the Private Money Script at jconner.com/scripts. If you want me to mail you the book, jconner.com/book. And come hang out with me in person for 3 days. at jconnor.com/event.
Great. Jay, really appreciate your time. Appreciate your, your gifts to us and the knowledge that you passed on.
Gary, thank you so much for having me. God bless you.
So, thank you. Hey guys, this week my guest was Jay Connor, who is known as the Private Money Authority and also the Private Money Teacher. And I will see you guys next week.